So hi guys, we're back with another breakdown of the Nasdaq futures. This is for Thursday, June 4th, and let's look right into it. So I start watching the market from 7 a.m. EST. By now you should all know that. This is where I started looking at the market. Obviously, I wanted to analyze context. What is the context for market coming in? The market is in a wide channel, right? The market is in a clear wide channel, and when I started looking at it, I was also looking at the tighter channel in the market. This was the tight channel in the market. This right here was the tight channel in the market, right? So I start watching the market from here. Right now, when I look at the market has two areas. The first is this tight channel, and the other one is the major channel, the wide channel. Now, wide channels give you opportunities for both the trades, right? You can have a bull trade, you can have a bearish trade. Both most likely work out in a wide channel. Now, when I was looking at the market, I was more convinced that the market was going to go up in an up direction. Why is that? Firstly, because of the wide channel, right? Secondly, this tight channel, when I was watching it, this couldn't really close near the high, near the lows, or this couldn't really go near the lows, right? So it couldn't really touch the lows of the channel, the tight channel, right? So now, and we have also have established a small range. If you look into it, this is the range, right? This is the range the market has been, like, ideally my likelihood was that there are only two possibilities in the market for the day. The first is that it continues up and then goes down, like it stays between this test area and these lows for the day, or it will break bullish, like the trend will completely reverse and it will go bullish, right? That was my two analysis that I was playing forward. I was really not looking at more sell trades. I was looking at more buy trades. Now, till this point, I hadn't taken any trade actually. Market went up. Now, you need to start looking at what is happening in the market. The market went up in a channel. This is the channel. The market went up into this channel. Now, what is the test area for this channel? If you have to locate it, this is the test area, right? And this is also near the lows of the minor trading range. So this is the minor trading range, tight trading range. This becomes the test area, and the market opened up, right? Opened up. Now, most people, what they would do once they see this, they would consider this a breakout, pullback, and continuation. But I didn't, because I had already drawn up the channel, and I knew that the channel, if it even wants to go bullish, the first reaction it would have, it would create a trading range, and then it will go bullish. So when the market came down here, went up, so this becomes two legs. This is two legs, one leg, two leg, right? This is the second leg, and exactly to my point of interest, which was the test area. So after this bar, I actually wanted to long it, and I actually longed it somewhere between this bar only. I remember it because I could see that this bar, once it closes up, it will not have a lot of chances to come down, right? So I longed it right here, somewhere near the mid of this bar. SL again simply below this bar, and TP was this test area, right? This was my TP for the day, right? I'm watching the market now. Within the first bar, right, just after the first bar formed, the market actually took a pullback, right? And the bar went below the low of the previous bar. That means only one bar breakout. This is a one bar breakout. This is my breakout bar, only one. I would not look at a longer breakout, and I will tell you why. Only this becomes the breakout, because if this was a clear breakout, right, the market would not even have made this bear bar. It would have continued up. So now I can expect a channel to be formed. The channel is here. One second. The channel is right here. This is the channel, the new channel for the market. Obviously, this is a really tight channel, so you can obviously expect very low pullbacks and mostly continuation, but still, nevertheless, it is a channel. That means it's trending upward. So when I had this bar and I saw that this channel is formed, you could obviously draw a channel in a couple of ways, right? You could keep it right here. You could, you could keep it right here. I was keeping it right here because it was just a one bar breakout. So I knew that the one bar breakout would not have a very wide channel into it, and the pullbacks were also small enough. Then I took another trade right here on the break of this bar right here, and my SL was here, right? And I was targeting previous day highs. because I knew from here the market has a strong potential to go up at least till the previous day highs. After that, I was still uncertain what the market is going to do. But yeah, till that point, I was quite sure that this is what is going to happen. And as you can see, the market continued in the tight channel, right? The market went up, came down again, becomes two legs, but I didn't take a trade right here. One leg, two leg. Sorry, I didn't draw it right. One leg, two leg. Right, this is my second leg completion. I could have taken another trade to move it more forward, but I didn't want to because the market had already reversed a lot. Now ideally I would think about this moving all the way to this test line, and I had marked it up in my chart. I had marked this level because I thought that the market was in a high possibility of moving above this level. But as you all know by now, I do not trade after 12. So only 7 to 12 is my ideal time when I like to trade and put on positions. So after this, I actually left the market. But if you were still watching the market, you got a couple of more opportunities, right? The market broke down. Now after every tight channel, there comes a wide channel. So what is my white channel now? I would redraw this to mark it right here. Now this is my white channel, right? This is my white channel. If you were watching it and you bought it right here, even if not here, you would have bought it somewhere around here. SL here, you would have gotten a 1 to 2 or 1 to 1 easy out of this. Now, what is the next step you need to do when you're looking at the market? Firstly, you can see that the market couldn't reach the previous highs, right? Market couldn't actually reach the previous highs, not even the test area, right? If it reached the test area, then it would tell me something else. But since it couldn't reach the highs, I could have looked for a continuation, like bearish, for a bearish continuation. And you can see, where did it come to? It came down even below the test area, below the test area, all the way to the low. So you don't need to be, the direction is one thing, but you have to understand where the probability is going to be high, more high. It gave me another reason to look for a bearish trade if I was trading near the end of the day. Why? This becomes the new breakout mode. See, no candle bar is overlapping coming to the previous low, all bull, and then it formed a channel. This was a tight channel, and the tight channel actually broke bullish. And I know that most channels breaking bullish fail. Now even though this was a very strong breakout, right? And if you look at it, another channel breakout, continuation, test area, and continuation bearish. So this is how you need to read the market on an everyday basis. It doesn't have to be stressful at all. Some days you're gonna be, like yesterday was a great day for me. I got great trades out of it. I made enough money for the entire week probably, because yesterday was a great day. But not every day is gonna be like that. But I am good at this because I enjoy doing this. It's a fun moment for me when I actually get to check what the market is doing, what it will do in the current moment. And I do not think that, okay, I'm confirmed that this is what the market is going to do. It is just upon the market to tell me that this is what it is trying to do. Sometimes it fails early, that means I get a quick out, or sometimes it just keeps going up. Like yesterday, if I would have not exited the trade which I took right here, I did exit it actually at the top. Otherwise, I could have held it all the way to the top and waited for this breakout and then this failure right here to exit actually. So I would have gotten a very great risk reward, probably a 1 to 6 or 1 to 7, right? Because my trade was right here. And I would have exited on this bear bar, this bear bar, this bear bar closing and the low being broken. So it would have been a 1 to 5 risk to reward trade. But I didn't want to trade that because I wanted to take my profits. I knew I was targeting these levels, my targets hit, and I'm out of the market. So that's what I did for the day. I hope you guys enjoy the video. Please like and subscribe my channel and let me know if you guys have any questions. Take care guys. See you in the next one.